Assalamu alaikum and good morning. In this lecture, we will be discussing all about financial markets. There are two functions in financial management. One is accounting. This is the goal of employees to maximize profit for their benefits, driven by rewards and promotion. Second is into finance. The goal of finance is to maximize wealth of the owners. The owner's ultimate goal is to maximize wealth. That's why they enter into the financial markets. Basically, finance represents money management and the process of acquiring needed funds. This is actually the lifeblood of the business for continuity of business operations. Finance is the application of economic principles to decision making that involves the allocation of money under conditions of uncertainty. This is how funds are obtained, and then this is how it will be invested to make money. There are three sources of wealth. One, the capital assets, which may be money to earn interest. Second, the capital assets, which can be land or building to earn some sort of revenue through rent or leasing. Third is labor or profession, in order to earn wages and salaries or professional fees. There are two kinds of flow of funds. First is the direct financing. This is where the borrowers or the spenders deal directly from lenders through financial instruments or securities. This is when a saver will go to a bank and then they will borrow. Okay? Indirect financing, where borrowers and lenders transact through intermediaries. There are intermediaries, like investment banks, okay, or insurance companies and others. Okay, as you can see, indirect financing, this is it's either the savers, no, they will put their funds in the financial market, okay, in the form of savings or in the form of financial instruments, and then the borrowers will also tap this financial market. That is what we call direct financing. For indirect financing, our funds will pass through a financial intermediary. Okay, the only difference is that here, from lender to saver, from savers to borrowers, they may transact, like the company, like Ayala, and then yung saver, bibili ka ng capital stock or share stocks ng Ayala or Jollibee, so you can transact, directly. For indirect financing, the savers will have to pass through a financial intermediary in the form of investment banker or broker or stockbroker, and then the company will also put their funds or their securities in the management of an independent or investment banker or a brokerage firm. That is what we call indirect financing. These are the elements of the financial system as shown in the diagram a while ago. The lenders and the borrowers are the main players. Financial intermediaries are how it will occur, the special type of financial entity that acts as the third party. Ito yung mga brokerage firms, investment banks, and others. Number 3, financial instruments. What will be used? Ano yung gagamitan as exchange, medium of exchange? It can be tangible or intangible. Pwede siyang cash or derivative. Okay? The most common earning assets for derivatives are stocks, bonds, commodities, currencies, interest rates, and market indexes. Okay. Number 4 are the financial markets. Ito yung place of trading, Money market for cash financial instruments and capital market for derivative financial instruments. Number 5, regulatory control environment, the controller of trading activities. This involves different businesses and financial risk regulated by the central bank. In our case, we are being regulated by the Bangko Sentral ng Pilipinas. Number 6 is the money creation, the value created. or the revenues and returns. And number seven, the price discovery, how much is created. So it is the process of determining or valuing the financial instrument in the market. So the price is actually driven by the risk, high risk, so high risk, high return, and low risk, low return. Okay, so first, let's discuss about the overview of the financial markets. So what is a financial market? A financial market is a market in which financial assets or securities can be purchased or sold. So this is a different kind of market wherein the products are the financial assets. So always remember that we already know the definition of financial assets. So financial markets facilitate financing and investing by the households, firms, and government agencies. So the participants that provide the funds are what we call the surplus units or the households. So tayo as the savers, and the participants that enter markets to obtain funds are deficit units. Those who need the funds, the government or the business institution or the company. So a major participant in financial markets is the so these are the types of financial markets. So it can be distinguished by the maturity structure and the trading structure of the securities. So first we have the money versus capital markets. So money market are for the place or the avenue for the flow of short-term funds, while for the long-term funds it is facilitated by the capital markets. When we say primary markets, okay, this facilitate the issuance of new securities, no, like the sale of new corporate stock or new treasury securities. Secondary markets facilitate the trading of existing securities, like the sale of existing stock or the securities traded in secondary markets. So those are the overview of the types of financial markets, which we'll be tackling more on the next discussion.